to create what we call a WHAM group, and that's right out of a book that we use. We look at students' trades charts and offer points for improvement and some ideas of maybe to help them see it differently, why they didn't see it in real time or what happened. Try to help new students develop a set of working rules and a business plan. If you don't have a plan coming to your trading screen, you're gonna bust your account, man, guaranteed. Then I took a spreadsheet out of this book and I applied it to trading and adjusted it to help you score yourself moving forward. All right, so what we're doing here on Tuesday is Jim, he'll do one tonight at 8:30. He'll do a pre-market, give you an idea of what we're looking at, where the peak formations are for the week, what we're looking at directional wise. And that's about a 30-minute presentation, starts at 8:30 tonight, Eastern time. But Jim is the resident advisor on trading psychology, and he talks a lot about monkey brain type stuff, how to get out of your own way, basically. Developing a mindset to win in the business, zone flips as a profession. That's his and my signature trade. Lower time frame executions, chart study, and his baby is the WSM viewer, which allows you to go back and look at the trades of the week. And he actually compiles those for you and publishes them Saturday afternoon, depending on when he gets to them. Doug's our resident swing trader on Wednesday. Same thing, 7 p.m., regular presentation. Talks about swing trading, identifying the peak high and low for the week, peak of the week, weekly cycles, managing longer-term trades. There's a different psychology for that. Looks at the higher time frames, 4-hour charts, holding through 2 or more days and the psychology behind it. And he is very good with MT4, technical help and tricks. And he has some little shortcuts and stuff that'll help you become more proficient in using that platform. And of course, on Thursday, everybody knows Carr. Carr maps out the levels. He brings insight to identifying intraday and weekly levels like only he can. He's really good. The orange boxes you see all over the universe and the web, those are from Carr. Identifying anchor points, entry, and triggers. And his variation on the safety trade, which is a private group that you have to qualify to be part of. So what happens is you'll be in the standard DMR. You'll have to submit some homework directly to Carr, and then he'll allow you to be in that separate group. And then Carr has specific rules of profitability built and developed over 10 years of trading. He's one of my top students, if not the top student, and he turned mentor with me. He's been with me since the very beginning. Carr was in my very, very first class in New York when I used to work for another firm, and I went in the classroom and threw their textbook in the garbage. And he said he was in love with me ever since, and I've been in love with him ever since because he's fantastic, man. Anyway, that's it. That's what we do. We have some pre-market checks. Sunday, we do some sessions. We got Skype chat going on 24/5. People post their trades in there and talk back and forth. You know, it's a lonely business, especially if you live in like New York or the Midwest. The business goes off in the late hours of the night or early morning. And it's nice to be able to chat and see other people screwing around and that are up with you, and you're not the only maniac that's there. So we keep company, so to speak, with each other. Right? I mentioned Carr and Doug will host some Sunday opens around 4:30, right when the market opens, and maybe look at some charts or have some traders in the group that are having success, sharing what they're doing, that kind of stuff. Take some beginner questions, just different things. But there's about 30 to 40 sessions a month going on. There's always somebody to connect with. There's always something going on. From Monday to Thursday, we run these 7 o'clock classes. Then we have some pre-market checks after to help you get your directionals for the week. Support is not the issue. You're the issue. Most people complain that they can't make it to all the classes. So those are recorded and posted in the DMR forum, which is just this stuff for you to go back and review at your leisure. So you don't have to wake up at 3 o'clock in the morning, your time, to see me. Okay. So the next thing coming up is we have a live in-person meeting. We'll get together. It's in New Jersey. and it's reserved only for students. It's not something you could just pop in. You got to be a student. You got to be paid in the group 24 hours before the meeting. We're hosting it, I think, 1st of March this year. And I pay for the room, the venue. You just got to show up. If you're a registered student, you can attend. You just got to figure out how to get there. What we usually do is each one of the instructors will do a little piece, about 30 minutes. We'll speak. We'll order some pizza from New York. It's fantastic. We'll get that in there. We'll eat something. And then we'll screw around a little bit, and then we'll go to the diner and get some cheesecake. And we got this little place up in Jersey somewhere that Carr set us up with. It's just a good time, man. We get to see everybody in person, kind of put the face and the name and the emails together. So I remember if you curse me out in email, I get to see you in person. Anyway. All right. So the normal book that we use for this is called The 12-Week Year. It's written by Brian Moran. And what I always suggest is don't waste time physically reading the book. Life's short, buy the audiobook. So the 12-week year shows you how to basically structure out 1 quarter of the year and treat it with the aggression that you would treat the entire year. And when you listen or read the book, or rather you listen, you get a idea of how to structure your day. And I feel, me personally, I feel like the book is geared to a more to like a, I don't know, like a sales type of business. But we've adapted it for trading. And we break the calendar down and show what we have to do to hit some of those targets. The second book that we always change books every quarter. So the second book that we're doing this time for the next 12 weeks is How to Make Shit Happen. And, you know, I got a bad mouth. This is right up my alley. But I want to warn you, the guy has a bad mouth. He's either from New York or he's related to me. But it's a pretty good book, man. I usually read over the break and over the summer, and I picked this book up over the break. And I've listened to it about 1.5 times. I enjoy it, making notes out of it and stuff that are relevant for us in the group. So regular students, grab this book, and we'll talk about it coming up here in the next couple of weeks, and get your 12-week cycle ready. And we'll talk about that coming up. Anyway, it's a pretty good book. Hopefully, you guys that don't become students, this will help you. So tonight, here's what we're going to talk about. The biggest thing that a lot of people ask me is they tell me, I want to quit my job. I want to get out of the rat race. I want to quit the 9 to 5. I mean, that's the typical buzzword for this time of year, right? Everybody's talking about how they want to go full time. Okay, well, you got to know what you're doing to go full time. You can't just go like, oh, screw it, I'm leaving my job. Some of the things that I suggest for people that are miserable in their work is maybe take some other type of job, like, I don't know, maybe a phone room operator or a server or something you could do like Friday night, Saturday night, Sunday night, even Thursday to Sunday, and have several days during the week to trade. Night security, I don't know. I just can't think of different things. I'm trying to think of some ideas of what people are doing. I know there's a guy on the other side of the world that does security, and it's mostly night, and he does it over the weekends when the buildings are not occupied, and that allows him to be available to trade. And he trades the U.S. session because that's the hours that fit for him over there. If you want this bad enough, you got to make some adjustments, man. It's not just going to fall in your lap. It's work. It's not a get-rich-quick scheme like everyone tells you on the internet. That's all bullshit. But I was asked to do this presentation. I did it a couple of years ago. I don't even know. I lose track. Is how to build a salary replacement model. Right? This is one of the most important things. Yeah, Pete's mentioned. Thanks for doing it again. So if you just walk up to the screen and start trading without a plan, you're wasting your time. So the assumptions for this are, if you're part of the group, you have your rules and business plan completed and you've submitted it to me. You have your instruments selected and have completed the behavioral analysis. You have completed your 30-day assessment, and you have a live funded account at a good broker. Man, those are the foundational things for the business. If you don't have that, you're wasting your time. You're going to lose your account or you're going to take a heavy draw. Guaranteed. All right, so I said it already, but the number one thing you have to do is get real. You see these people on the internet posting these $10 million trades and $5.7 million withdrawals. It's bullshit, man. It's demo. And if you're in the group, you'll understand that I know what I'm talking about because I can show you liquidity and availability of lot sizes, and you are not getting filled on the half a pip with 100 lots, 200 lots, 500 lots. It's not happening. It's bullshit. The liquidity is not available for you to get those orders filled at those levels. And as we move through the cycle this year, we'll talk about order flow, liquidity, the order book. We'll look inside maps of what the order book looks like and what's available and how that stuff's getting filled. Okay, so get real with yourself. You got to think linearly, right? How does a salary get built? You have a money line and a timeline. Grab a pen here, right? So this is your salary. Let's just say it's $50,000, all right? This is your first benchmark. How are you going to get from $0 in earnings to your first benchmark to where you could leave your job? What has to occur? How do you manage your funds? What has to happen for you to get to the first benchmark? And then beyond, right? This is the goal, is everybody to get here. But you have to think in time, right? This is going to could take 1 to 2 years, depending on the person, depending on the equity, the starting amount you have to do this with. One of the biggest problems with people that I've met in the business is that they start $1 million demo and they got like $1,000 to $5,000 to trade realistically, right? 1 to 5,000. And then what happens is you spoil your brain and your mindset that if you're making 10,000 a day on $1 million demo, you can't go back to making 100 a day or 200 a day. It just basically, I won't use the F word, but it screws with your mind. It messes with you mentally and emotionally and doesn't allow you to move forward in the business. Just keep that in mind. I started with $2,500 in my first account and it was off of a credit card and I almost busted it. It was close. I was panicking. It's 20 years ago now. Started trading in 1999. So this is my 20-year anniversary this year, or 2019 was. Okay, so you have to figure out what does it take to get to 50,000, then what does it take to get 100 and on to 1 million. And it takes some combination of pips earned and lot size. And we're going to talk about that tonight, how to do that. All right. What are the 3 things you have to have as a trader? They're so simple and stupid, but a lot of people don't even have that in place, right? Anybody, just blurt it out, type it in there. I'm going to tell you the answer, but just write it in there. What's the first thing you have to have? And you know I write horrible with this pen. Got to have a systematic approach. All right, I'm just going to write. This is awful. That was an A, by the way. And that's a C. All right, systematic approach, right? Okay, a systematic approach is going to include several different things. It's going to be your business plan, your rules, rule for entry, rule for exit, rule for management, rule when to move break even, what days you're supposed to be trading, right? Just a systematic approach to handling the market. Are you trading 50 pairs? Cut it down. Cut it down to 4 or 5 pairs that you can focus on and that you could really get away from that FOMO that you're afraid of missing in a setup. You got 15 things you're scanning through. You're looking for a setup. You're going to drive yourself crazy. You're not going to get what you need out of the business. You're just going to drive yourself crazy and miss. Then you're going to be aggravated that you missed a good setup. Focus on a few key things, right? You got to have some money or some equity in your account. That's, of course, if you don't have any money in your account, you're wasting your time. So while you're demoing and learning, you should be saving. You got to have a plan to withdraw your money out, right? This number 2, I guess, is your equity. You got to have a way to handle that equity. That equity is like your inventory in a store. I always talk about a shoe store, right? Your equity. You got to know how to handle that. If you have $5,000 to start, are you just going to throw it in there and start trading? You're going to lose it. You're going to be busted. And you're going to be like, now what do I do? That was my $5,000 off a credit card. I'm broke. You got to know how to manage this and set it up. And that's stuff that we do in the group. And then, of course, the obvious thing is you got to have a plan, right? And that's part of the assessment, the steps that we go through that I talked about. You got to have a way to manage your money. You got to have a signature trade, pairs traded, hours in the office, what you'll do. Will you work a 4-day week? How will you map out your 12 weeks ahead of you, your quarter, right? You got to have a plan. Planning is everything in this business. Are you just going to walk up to the screen and start throwing money at it? That's what a lot of people do. They go, shit, that looks like an M, that looks like a W. Steve said they work. I'll freaking take it. It doesn't work, man. That's not what I advocate, by the way, but that's what people accuse me of. You got to have an approach. You got to come into the office at a certain time every single day. You got to set your hours. You're going to be in the office from 1 to 6 a.m. From 1 to 6 a.m., you're going to check down 4 pairs, and you're going to mark the directional bias of those pairs. And you're going to know that you're only going to be long pound, long euro, and maybe you're going to be long gold, whatever it is that you're looking at. But you got to have a systematic approach to execute whatever it is that you're studying or looking at. And it could be a combination of futures and Forex. It could be just Forex. It could be some equities. It could be ES, whatever it is that you want to trade. My methodology applies to every single instrument on the planet. You could walk up to anything. You walk up to lean hog futures. You could walk up to cotton, and you could find the entries in there. They're in there. The flips, the pullbacks, the continuations, the 3 counts into levels, all that shit's in there. Because why? Because human nature is universal. People have the same fear and greed and panic, and the dealers trap and accumulate. They block areas on the chart, right? This shit is universal. The blocked area is the blocked area, right? This shit's universal. People's behavior is universal. And that's what gives you the edge. It's not just understanding, oh, that's an M, that's a W. Because an M in the wrong context doesn't hold, right? Coming out of level 2, taking an M back towards the W formation is a sure way to get killed. Okay, so what is it? Let's say an average salary. I don't really know, and forgive me if I'm like $50,000. Like, shame on you. That's too high. It's too low. I don't know. So I'm not trying to insult anybody. If your salary is $25,000, then the effort is half of this. But I think a normal U.S. salary is about $50,000. So how are you going to make $50,000 in the Forex business in 12 months? So let's say that you want to work 10 months. You want to leave your job. You want to have a little more free time. You want to be off June with your kids when they're out of school, and you want to be off December for the holidays. Okay, $50,000 at 10 months is $5,000 a month. So now your approach with the challenge of how to take $5,000 a month out of the market consistently enough to leave your job. Okay, you need 5,000 pips a year at $10 a pip. You need 1,500 pips a quarter, 500 pips a month, 125 pips a week. This is for a one-lot trader. Okay, so now, here's your first quarter. Here's your first 12 weeks of the year. In your first 12 weeks, what are you going to do to hit your first benchmark? Okay, so we just said that you need 500 3 times, 1,500 pips a quarter, right? Okay, so now 125 a week. You have to figure out, are you going to trade a 4-day work week? If that's what you want to do, let's block out Fridays, right? It's important to understand that trading crosses that don't come in at the $10 pip benchmark diminish your ability to earn. Fees, commission, broker transfers got to be included in your calculations, especially on smaller accounts. If you're trading a couple $1,000 account and trying to make a living off of it, you got to take every penny into account. When the account starts to get bigger, $25, $50 hit on transfer, it's not a big deal. Fees, commissions, it's not a big deal, but it's going to be a big deal when you're first starting out. Okay, just keep that stuff in the back of your mind. So let's strike out Friday so NFP doesn't affect your trading. It's never going to be an issue. You're off on Fridays, right? Strike out red news days for your session. Friday is your buffer day. With the exception of the first Friday, unless it's changed for a holiday, you can add Friday back to your schedule as needed to adjust for news, interruptions during your session, right? Maybe somebody's speaking during London. That'll mess you up. Maybe there's some other news release during red news during London on a Tuesday, and you want to come back and hit it on Friday. You can flip Friday or Monday as your buffer day. So your calendar would look like this. Now you're blacked out. Now this is your 4-day work week, right? Saturday is your WSM viewer day, Saturday or Sunday. And this would be your prep time going into here. You would need to take about an hour on Saturday or Sunday, go back through and look at when Jim publishes the list, go back through and filter out the instruments you are trading and look for the setups in there and either make flashcards of them, study them, look at them, and see if you saw them setting up. That's your pre-market. Make your projections going forward and see if you would have caught those. And that's your benchmark, your standard for the week. If there was 15 setups and you needed 8, were your office hours conducive to hit those 8? Hold on one second. I need to get a drink. All right. Just quick mic check. Someone's saying they can't hear me. Are we good? Everything's still good, right? All right. So now you have 4 days during the week. During your 4 days, you need to have a plan how to spend that time. Let me erase this. All right. You got 125 pips a week, 4 working days. You need about 32 pips a day net. Okay, you have to maintain strict rules and manage your stop loss effectively in order to net those 32 pips. If you catch a trade for 32 pips and then move your stop to minus 50 and it takes you out, you just gave up your winning trade plus part of the next winning trade, right? So one lapse of judgment throws off the entire model for the month, for the quarter, and maybe sometimes 6 months out. If you burn half your equity on one stupid trade because you can't manage your stop loss effectively, you basically destroyed your equity model. And that's what people don't understand. They can't take the 10 pip loss or the 7 pip loss or the 25 pip loss and just realize, man, I misjudged this trade. Let me move my stop. And it turns into a disaster. It turns into 50, 60, 70 pips down. This behavior destroys any equity model that you build over time. And I'm going to show you that towards the end here. All right, so just a basic plan. This is part of planning. All right, we're looking for 32 pips a day net. Your daily plan is to execute 2 trades with a 10 pip stop and a 25 pip take profit. Okay? The overage in earnings can help cover a drawdown day and allow you to meet your weekly goals. Fridays are always available to be added back into your week as a recovery day. You should get to a point where you don't need your recovery day. You got a 4-day work week, and you're in a good place. All right, so let's look at some ideas here. Okay, so all right, you do your prep. You come in Monday, first week, nail it, 50. Tuesday, I don't know what the hell happened. Took 2 hits. right? You lost both trades. You decided to stand down. Came back Wednesday. You had a 50 pip day. Thursday, you had a 50 pip day. You don't need Friday. You're good. You carry over. Your first week is 130. That gave you a few extra pips carryover, right? Okay, next week, you do your pre-market. You're in. You come out of the gate. Monday agrees with you. Tuesday agrees with you. You ended up scratching out and taking a hit, minus 10. You come back. You didn't get your full 50. You got plus 40. Maybe your stop choked you out or something happened. All right, but again, you're plus 130. All right, you do your pre-market. Maybe your wife pissed you off. Something happened. You got in a fight with her. You went in the office Sunday night. She wanted you to watch, what does everybody watch? Game of Thrones or some bullshit? She wanted you to watch TV with you. You went in there. You were pissed off. You left her. Took a double hit, minus 20. You came back with 150. Came back the next day with 50. Thursday going in, you only hit one trade. You scratched out at plus 1 or even. Ended up with plus 25. Okay, so now what? You had a 105 pip day, but you had 10 pip carryover from the 2 previous days. You're still at your goal of 125. Okay, this is what the model should look like. You should have a calendar. You should buy yourself a Walmart date book or a whiteboard in your office, and you should write exactly what's going on and what you need to complete your week. Right? You're looking for 8 trades a week or more. If the going's good, it's always nice to win your first or second day of the week, and then you feel comfortable because you have equity in your pocket, and you're not into account draw, you're into trade draw, right? So if you have 100 pips that you earn the first couple days out of the box, and you take a couple of hits, right, you're still net positive off of your first day of trading for the week. So that gives you a little comfort. Okay? And you should fill this up. This is 12 weeks. This is your first quarter of the year, and you should have your model developing like this. Okay, the easiest way to simplify the approach is to simply add lots, right? If you're a 1-lot trader, then if you add a second lot, right, it's the numbers are cut in half. All of a sudden your annual pip count goes from 5,000 down to 2,500. Your weekly pip goal drops to 63, very obtainable. Your daily pips just become 16, maybe rounded to 20 or 25. All of a sudden, you took a lot of pressure off yourself. Okay, and if you add a third lot, it gets cut to a third. Okay, so here's the thing. Here's the problem with a lot of people. What if you simply can't afford to increase your equity? How are you going to be able to do this? How will you be able to still reach your goals with a smaller account? And that's what a lot of people are struggling with. A lot of people don't have $10, $20, $40,000 to put into an account. And I understand, I was there. Okay, my first account was $2,500. You know, people tell me now they're starting accounts with $100 and $200. The truth be told, man, it's bullshit. You're wasting your time. First of all, you're going to have to trade micros or minis. And if you're trading one mini lot, you're going to need 50,000 pips to make $50,000. Think about it. It's $1 a pip. If you're trading micros, you're going to need 500,000 pips. Think about that. It's a lot of unnecessary pressure to put on yourself. It's possible to hit the numbers, yes. But you have to have some discipline and patience, and you can't get sucked into all the bullshit on the internet. You have to just filter that garbage out, man, and just focus on your goal, your plans, what works for you. It's a different fit for every single person. Everyone has a different situation. Some people are divorced, they're splitting time with the kids, so they can't trade every week, they can't trade every night. You got to take care of life shit, and you got to figure out a way to compartmentalize that stuff. right? You got to say, okay, when I'm trading, I'm trading. When I'm in the office, I'm in the office. When I'm with my kids, I'm with my kids. Or whatever it might be. When I'm at my regular job, that's it. But if you want this to work as a business, you got to get real with yourself. You got to have a systematic approach, and you got to figure out a way to either make it fit with work, to make it happen. There's some people in here, man, that have done some amazing things, and I think he gets mad when I bring him up. He's a very quiet person, but I won't say his name because you guys will bother him. But he's a manager of a pharmaceutical firm. I think he's a district manager. He manages several stores, and he works a normal 9 to 5, and he figured out how to get it done. That's what, I don't know. I think in Spanish it's ganes, like guts, determination, grit, whatever you want to call it. Man, if you have a family and you make it happen at this level, it's amazing stuff, man. But the thing is you have to figure it out. I mean, it was easy for me. I mean, I don't know if it was easy, but I had a fire department job. You work 2 days a week. You work a 24-hour shift, off 48. Then I used to pay people to work for me and cover my shift, right? There's a thing on the fire department called exchange of time, where I can work his hours, he can work my hours. So I wanted to be working on the weekend and off during the week when the market was open. So I would volunteer, hey, I'll work your Saturday. People are like, I'll take that trade off, because they were in the normal 9 to 5 mentality. They were like, oh, I want to be off Friday and Saturday with my family. I go, I'll work your Friday, I'll work your Saturday. You work my Tuesday and Thursday. You work my Sunday and Wednesday. So I could be home when the market was open. So it was an easier road for me by working the system that I was put in. I was placed in that system, and I figured out a workaround. Okay, if you're in a normal 9 to 5 and you hate your boss, and you want to come home and kick your dog and beat your wife, okay, well, how are you going to get out of this? What are you going to do this year in 2020 that's going to be different than what you did last year? Right? You have to figure it out. You have to figure out your workaround, whatever that is. If you're struggling with custody of your kids and you're spending time with your kids, work something out with your ex. It's better to get along anyway. Figure out what it's going to take for you to adjust your current employment, your schedule, to be in front of the screen, committed 4 hours a night, 4 days a week. You think this shit's just going to fall out of the sky? You're going to walk up to the screen at 3 p.m. and take an M and go, oh shit, that worked. It's not how it is, man. It's a business. And the minute you let that sink in and actually treat it like one, you'll start to see the results that you deserve. Your habits, right? The very first slide I showed you. Your habits define you. What are your habits? Are your habits coming in the office 1 o'clock till 6 a.m., 4 days a week, 5 days a week consistently, and maybe giving it an hour or two on Sunday for a pre-market, doing some homework, looking at the stuff that Jim spoon feeds to you? And I always talk about this. I have a little issue with it, is because he hand feeds it to everyone in the group, and very few people even take advantage of that. But I have an issue with, how lazy do you have to be that you can't look? The guy spent hours every single Saturday compiling all the data for everyone, and he covers an array of pairs to make sure that everybody gets fed. Because some people like the crosses, some people like Mexican. The shit pisses me off, but whatever. He takes the crosses and the majors, and he compiles all the data and hands it to you, and you still can't even open the file. Think about that. I can tell you, and Jim will attest to it, what made him an elite trader was the fact that he's been compiling this data since he started here. He's been compiling flashcards and data and grilling it into his brain since the beginning. And that's what made him special and different. You just got to do the work, man. All right, so listen, if you can't afford the equity and you can't come up with the equity, what's the next thing you can do? Fractional money management. We have a spreadsheet calculator in this group that was shown to me probably 15, 18 years ago by DDSM, Delta Swanson. It was this guy's name, and he's no longer around. I don't know what happened to him. I don't know if he passed away, but his site is down and his stuff is down. But this page was transposed into what is it, Excel for spreadsheets, and we came up with a pretty good model. So this tool allows you to scale your account slowly and safely while controlling risk and avoiding the dreaded over leveraging, what every trader does. So let's take a look at this. And I have some different examples. So basically, you take whatever amount you have, and I'm just using a $5,000 account example. I need a pen. So you enter in your equity balance, right? Your starting balance. You enter in your risk percentage, right? This goes all the way up. And by the way, I should have had it programmed where it won't take anything higher than a 5%. But a good standard risk for a beginner is 1.5 to 2%, right? And I mentioned to you, use a 10 pip stop, 25 pip target. That's a good safe number. If you're trading like euro and pound and maybe Swiss or a pound cross or something that has an aggressive move, right? Okay, so if you're trading one of those crosses, an impulse leg, and I talk about that all the time, you know what that is, right? So from your place of entry, your impulse leg, which is this move before the pullback into the next level. So if this is L1, right, coming off the formation, your impulse distance, this is part of your mapping and understanding what you're looking at. Your impulse distance on these instruments should be 28, 32, some number, right, that is going to give you your TP in a relatively short order. So if you know that an impulse leg is made up of the ADR, so if you have 3 impulse legs, right, you get your first one, your pullback, your second one, your third one, right? If your ADR, and I'm just doing simple math, if your ADR is 100, right, then you know roughly your impulse legs are about 33 apiece, right? 99. So if you're trading a 25 pip take profit or a 22 pip or a 20 pip, whatever you want to trade, if you're trading these impulses throughout the day, right? Maybe you take this as one setup, this is a second setup. You should be able to hit your 2 setups and take 25 clean. The 33 subtracts about 7-8 pips off the top, allows you to cover the spread and allows you to get a semi-shitty entry. So if you don't get a perfect entry, where what I call a zero entry, right, coming in off of this pullback, this subtraction of the impulse leg to about a 25 pip take profit allows you to still hit your goals and get a late entry or not a great entry. But your job as a trader is to clean this up and to make sure that you're getting better entries and that a 10 pip stop is good enough. Maybe when you first do it, you make this a 15, right? But your goal is to draw that in, accounting for the spread. That's why some of these exotic crosses with higher pip spreads, and during London Open or the sessions, they start spreading open. That's the kind of stuff that you got to account for as part of your business plan or part of trading in the business. This is the stuff you have to make adjustments for. They're not just going to go, oh, well, I'm sorry, you're my hero, let me cut it down to half pip spread for you. You got to make those adjustments, man. You got to do that shit. You got to figure out, you know what? I'm going to start trading euro only because I get a 1 pip spread. I get a 0.5 to a 1 pip spread and a small commission. I'm going to start trading that only. That's what you have to do. That's the difference. That's going to be the difference maker when you start running it like a business. Instead of taking some exotic cross that has 7 pip spread, you got to cover 14 to get in and out, plus your 25 impulse. Just keep that in mind. All right. So you plug your numbers in, whatever your account size is. I think I have a smaller account model too. Whatever your account is, right? Each one of these blocks are 10 trades. Okay? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Right here. You can see that, right? The thing starts on 10. So what you're doing is you're slowly increasing your lot size, right? This is a 1 lot trader. This is a 1.1, 1.1. And it slowly increases up to where you're trading about 15, 16 lots. And what happens is you go from a $5,000 account to a $7,700 account, which is over a 50% return on your equity. What happens is you plug in each value as you're moving along. If this is a win, right, you plug in your 25, you plug in 15, whatever you hit, and these values will be adjusted and these lot sizes will be adjusted. If you lose, you put in a -10 and this will be adjusted. These values will be adjusted. So what this does is you're always using the dealer's leverage in a safe, managed style to where you're not over leveraging your account, but you're also getting the best bang for your buck, so to speak. You're taking the appropriate lot size for the amount of equity you have. So by doing that, it allows you to maximize your earnings and mitigate and control your losses. Now, think about this. You take a hit and you can't stand it, and you turn this into some 25 pip loss. Now you destroyed the model for this 10 trade cycle. Right? I've always talked about never judge yourself. One trade does not make a trader. One trade does not define your career. Right? You don't look at like Tom Brady, right? That gets the best quarterback of all time right now. He throws one pass and it's a completion. Yes, he's 100%. He's the GOAT, right? He's the best. No, you're judging this guy over 20 years of trading or 20 years of throwing the ball. So in order to be fair to yourself is why would you define one trade? Why would you let one trade destroy your account? And why would you puff yourself up from one win? You have to understand that in order to last in this business 5 years, 10 years, 30 years, you have to be 80, 75, 80% consistent with a 2-to-1 risk to reward and manage your equity. Your inventory in this business is your cash. That's what keeps you in the business. You wouldn't open a shoe store with no shoes, right? Would you open a burger joint with no meat patties? No. So your inventory in this business is how you control your equity, your money. That's your inventory in the trading business. You have to treat your inventory with respect. Lifting a stop destroys any of these models that are created and throws them out the window. And it takes, if you take, okay, 1, 2, 3, 4, 5 trades. If you take a 50 pip hit against your equity, it's going to take you at least 5 or 6 trades to get it back because of the damage that you've done. Hope that makes sense and that's hitting home with you. I've seen so many people told me, oh, I don't trade with a stop, man. You got to trade with a stop, even if it's an emergency stop. If your stop should be 10, then put a 20 if you can't tolerate what your broker's doing to you. I understand, but you got to switch brokers. If this is the only broker in your country that allows you to trade smaller account sizes, then you got to figure out a workaround. Maybe cut your lot size in half or aggregate in something different. And if you're part of the group, I'll offer you a solution, show you how to aggregate at the stop levels or how to trade into the stops. This way you're at a safe point on your entry to try to protect your equity. Okay? Listen, these tools in here are for the group, man. I'm not giving this stuff out. I knew that question was going to come up. You get the spreadsheet by being part of the family. That's how you get the spreadsheet. All right, so let's look at a $1,000 account, right? 2% risk, 10, 25, same thing. Okay, look, it's a little slower going, but in 10 trades, right, I was showing you that you're taking about, what do we say, 4 trades a week on a 4-day work week. 4 times 2 is 8, 8 trades a week. 8 times 4 weeks is 32. 10 block trade, right? So down here, this is 32 trades. It puts you into about a month. So you go from $1,000 to 4,100. That's 400%, man. Not over leveraging, not risking more than $20. This is correct on a $1,000 account, $20 risk. You think about that. You can control this. If you had to go 15 pips, $25 risk. That's something you can live with. This is the problem with people. If you see somebody posting some bullshit trade for $7 million, then you're like, oh shit, I can't live with $50. It's not the $50, it's the end result. Can you live on $1,000 a week after a month or two of trading and building your equity? Of course you can. Especially some of you guys that are writing me from poorer areas of the world. This is a great place to start. This is going to give you a leg up in the business. Most people never learn how to manage their inventory, their equity, their capital. And they just get in there and start trading shit with no plan, no set of rules, no way to govern themselves. In a way, if you don't have rules, it's like the Wild West, man. You become a mouse slinger, right? Instead of a gunslinger, you just get in and start clicking the mouse. That's an M, I'll take it. That's a W, I'll take it. That's some bullshit, I'll take it. Right? And then what happens? You have no structure, no plan, no way to run it like a business. No map for the next 12 weeks. And then what the idea is to map out 12 weeks, and that becomes your model, and you repeat the model over and over 4 times a year. And if you're fortunate enough to take off June and July and December, then you readjust the model to fit your needs. Maybe you risk 2.5% to make up for the time that you're off. But you adjust this number and you look at, okay, at the end of 1 month, I'll have 4,000. That means that this will probably be 4 times again at the end of 2 cycles. The thing to do would be to take out your original equity of $1,000 and put it in your drawer. That's your safety net. That safety net allows you to feel comfortable that if anything happens. And listen, I don't mean some stupid shit like you're going to move your stop. I've gone to bed and woke up and had 6 figures taken from me because the broker got raided in the overnight hours. Some people remember this. It happens, man. I'm happy. I'm up over 100 grand in my account. I go to sleep. I wake up. Account's locked. Start doing some research. The FBI raided the broker in the overnight. The whole thing was a house of cards. He was stealing the money, blowing it on strippers, private jets, and coke. Look it up, man. They made TV shows about it. It's happened to me on more than one occasion. It's disgusting. Yeah, Lou, nice. Wasn't to me, man. And then they put on this big charade. Yeah, some people know what I'm talking about. They put on this big charade to get your money back, and you get pennies on the dollar 10 years later. What do? You make sure you take your equity out. So if some stupid shit like that happens to you, you're prepared for it. Rainy day funds, right? As soon as you get enough money to pull your equity out, I don't care if you pull it out in a couple cycles, you pull it out in $500 increments, or you pull it out in $250 increments. Right? You just make sure you get your starting capital back, because it doesn't have to be something you do. It could be out of your control, right? An act of God, whatever you want to call it, or an act of the federal government. But I mean, if the guy's running a shit brokerage house, it's gotta come to light eventually. That's why I'm not a fan of these things registered in Cyprus and these off the wall places. You're going to send your money over there? There's no way. You can't do that. You got to be at a regulated firm, man. Years ago when I started, I used to be at Citibank, and I used to bank there. I used to have their credit card. I loved them. They went out of business, man. They moved. They got out of the Forex business. I mean, you're talking about a firm that's been around for decades, but they decided to get out of the business. Now you got these fly-by-night places that almost like create a casino mentality. They'll take $100 or $50 and they'll give you a $10 matching bonus. And that's not a business, man. That's bullshit. You're wasting your time with that stuff. You need to be at a reputable firm. You need to make sure as soon as you hit your first benchmark, double your account, you need to take something out. You need to make sure you can get a check out. That it doesn't have to go through some cash app to get your money. That's not a business, man. You know what I'm saying? If you're using a cash app to fund your account, you're not in the right place, man. A real broker has ACH, direct deposit. You know what I'm saying? These are things that you have to consider. If you're starting out and don't have a lot of money, please, I'm not trying to insult anyone. I'm just trying to open your eyes to how the business really works. If you're one of those people that are throwing $200-300 a pop and losing it, you're funding these assholes. They're counting on you to put a small amount of money in there and over leverage it and over trade it. If you're trading a small account, then you need to be controlling your risk at some number that's manageable. And this is part of that. This is one of the elements of the business, right? It's a three-pronged stool, or what is a three-legged stool, a three-pronged approach. You got to have a way to manage your equity, manage your funds. You got to have a methodology, and you got to have a plan. I said that in the beginning. And that's what I'm trying to stress for the beginning of the year. This is the difference maker for a lot of people. They're missing this element of the business. That's why I decided to give it to you tonight. Okay, so then here's a normal size account, or someone is more fortunate, I guess, right? You would scale your risk back to maybe 1.5%, and you would still see incredible numbers, right? You're able to pull out $10,000 a month, or I'm sorry, over $60,000, $70,000 a month. This would be about $11,000 a week in return, right? Risking less than the normal. Smaller accounts risk 2.5. You're still going to see good numbers. Control your stop, right? Your stop's going to be about $400 or $500. If you've been trading any number of time, are you capable of hitting 7 out of 10? That's the assessment stuff. That's the stuff we review together. Danny, I don't make broker recommendations publicly. That's something, if you're part of the group, be happy to help you with that. So are you hitting 6 out of 10? Do the math. Put it into the spreadsheet. If you're hitting 6 out of 10 trades, you're still going to show an increased bottom line. Still going to show that. That's the whole point of the exercise. All right, let me wrap this up. I could talk about this stuff for days, hours, eons. I love this stuff. Can't get enough. All right, so money management is the king. It's the key to the business. Once you have a method for entry and exit, the rest is up to you, how you manage your account, how you control your equity, how you handle your inventory. If you over leverage every trade to try to compensate for your lack of funds, it's simply a matter of time before you get busted, right? Stop typing in Skype, Stacy. Give it a minute. I'm almost done. If you over leverage every single trade, you're going to get busted. I can't say that enough time. It's just a waiting game. When will you get busted? You take $1,000 account and trade 5 standards, you're going to get busted, man. It's not if, it's when. And what I'm trying to help you do is not make that mistake. All right, so fractional money management allows you to reach your money targets and goals while actually accruing less pips. You don't need 5,000 pips if you're managing your money right. Maybe you need 3,000 pips a year. This will alleviate the need to overtrade and over leverage, which is a common mistake in the business. These 2 behaviors alone are responsible for almost every single trader's downfall, not knowing how to manage your equity correct. All right. Okay, so new students, you guys that just joined over the holiday, we're back. I need a complete workup of your trade, all phases. All right, remember stuff we talked about, lead-ins, setup, triggers. If you haven't seen that stuff, it's hanging. The recordings are hanging in there. Get a look at those. Get them to me. We'll talk about this stuff next week. All right, I need personal assessments for you people that are a little bit further along. If you haven't sent me an assessment, send me the numbers. We'll plug it into the spreadsheet together. We'll figure this stuff out. Those of you that are in the bounce group that are under CAR's regime, you guys you're exempt from this assignment, but you need to just get with CAR on this stuff. All right, I'm going to start the cycle for us, get geared up for the new year, lay out the 12 weeks, where you should be, what we got, your goals, targets, and we'll go from there. I do not have a Telegram group. It is not me. It is people impersonating me. We have a private group with Skype chat. Right into support at Beat the Market Maker. if you have an interest in being part of the group. Don't ask me for free shit. Not doing it. I don't piece out my stuff. You're either in the group or you're not. I had people want my template. They want my spreadsheet. Not doing that shit. Just, you want to be part of the group, be part of the group. If you don't, we're good, man. All right. I got no issues. All right. So listen, Jim is going to host a pre-market at 8:30. You guys all have the links. You're invited. And then tomorrow night at 7, Jim takes the mic for about an hour, give or take. And he'll give you his presentation. And Wednesday's Doug, Thursday's Carr. Try to attend the pre-markets. You'll get pre-market Monday, Tuesday, and then Thursday night or Wednesday night, Thursday night, Carr does the London. Gives you directional. All right. Let me look at these questions for a minute. See if I can help anybody. Okay. If the other thing too, if you want to ask me anything, you guys got my at Steve Mauro on, what is that? Instagram. I guess that's the most popular platform. You want to hit me up in there. Most of you got the link from here. I don't know what farm. I don't know what do you want to talk to me about? Just send it to me. I don't know what you're talking about. This stuff's been around for hundreds of years. Just hit me up. If I'm interested, I'll bullshit with you about it. If not, I'll just let you know right up. Won't waste each other's time. All right. Okay. Doug posted my handles up there. It's at Steve Mauro on Instagram. Okay, man. Love you guys. Happy to be back. Happy to see everybody. Happy New Year. And I will see you when I see you. Good night.